Hello, my name is Hugh, Agro, President and CEO of Revival Gold. We're advancing the Beartrack-Arnett Gold Project located in Idaho, USA. We got 3 million ounces of gold in the resource. We're moving towards a PFS on the first phase heap leach aspect of this project. And meanwhile, we're continuing to drill. Last year's drill results at the tail end of the season, we hit 14 meters of 12 grams per ton gold in the Joss zone. And we'll be back there in May.
Hugh, good to see you, sir. I think we officially saw each other back in December when you were at 55 cents, you're now 70 cents. But we have had a couple of failed attempts, I think technically from our side, to do a little bit more of a deeper dive in terms of technical analysis and due diligence. So we're going to probably move that to next month when your resource should be out. You're okay with that, aren't you?
Yes, I think that'd be wonderful. We'll get some of our team members on, and we'll love to tell you about the developments on the resource. It's an exciting follow-up to the last 2 years of drilling.
Yeah, it is. And there was a lot went through, and so we've got a better understanding. I guess internally, we need to get that out and share that with people. So, look, Hugh, you kind of recently put out a sort of an update statement. I just kind of wanted to kind of run through some of what's going on there and where we should be looking, because it looks like you're going to be quite busy in 2022. I just need to understand the order of play. So should we start with Beartrack-Arnett?
Yes. First, the resource update, which we've talked about in April. Next, in May, we'll start drilling again. We've got 4,000 meters of core drilling planned in the Joss area, which I mentioned earlier is a high-grade opportunity for Revival Gold. We'll then move into RC drilling with another 3,000 meters later this season, looking for additional oxide opportunities for our heap leach project that's already in PEA stage, going to PFS.
Okay, so just in terms of where you think the value is coming from, because what are you, 60 million market cap, right? So people are got very, very excited about the recent sort of the high grade stuff. Like say putting out 4.5 over 4.5 grams over 110 meters, 12 grams over 14 meters, 8 grams over 12. Those are the numbers that get the market excited. But you've got to kind of piece this together, the different projects together in a way which builds a picture for long-term success. So can you just sort of help us with understanding how you're going to deploy the capital that you raised recently this year to, deliver the stepping stones that you need to do this the right way rather than just hunting for headlines?
Well, part of it is in working from a brownfield site. And the other part of it is taking a phased approach. And in that phased approach, we'll start with a relatively modest heap leach aspect to this project. So we're talking about something in the order of 72,000 ounces a year, $50 million of free cash flow a year at $1,750 gold. But the bigger play is the exploration beyond that initial phase of the project. And what we want to do is thread the needle, if I can put it that way, between getting into production for a relatively modest amount of capital, currently contemplated at $100 million under the PEA, and then build out the potential for a long mine life in this great jurisdiction of Idaho. And we do that, as I said, brownfield site, phased approach, and we're working towards the engineering right now that'll take us forward.
Right. So the heap leach, as indicated in the PEA, obviously the numbers look good, but you'll need to provide some kind of robustness to them. So you're planning on the PFS later this year. What's the timing on that?
By the end of this year.
So Q4 at some point, or is this one of these things that literally right up to the end of the year because you want to get as much in there as possible?
Yeah, we do want to get as much in there as possible. There's a lot of engineering that's going into the PFS. We've got 13 column tests underway to improve on our metallurgical recoveries. We've got geotechnical work to improve on our pit slopes, hydrological work, environmental baseline, supplemental data being collected. All of these things will play into that PFS. So we're going to need the full year to complete that job. By early 2023, we're going to have a view on the steps forward with respect to that first phase heap leach and the timing to take us into production. Meanwhile, exploration will continue. And I cannot emphasize enough the opportunity we have at Beartrack-Arnett. A kilometer of strike, 7.3 grams per ton gold in the average of the 18 drill holes on that Panther Creek shear zone gives us a great opportunity for a high-grade second phase opportunity at Beartrack beyond the Heap Leach project.
It's worth reiterating. I mean, you've not missed yet with a hole. I thought that was interesting that you hit gold every single time. Which is, it is truly amazing. But here's a question, and this question sent in, and it's a fair question. It's one I ask a lot around the thinking and the mindset in this current environment, which is obviously with supply chain issues last year, we saw inflation creeping up. With the printing of money, we've seen inflation creeping up, and mining across the board has been hit hard by this. Some companies are fearful of going too quickly into the next study because they're going to have to put down and show the economics which reflect a higher cost environment, right? Which potentially, damages margins or quite frankly, the economic viability of projects. So why not? Here's the question. I get there in the end. Why not expand the drill program and postpone or delay the PFS?
Yeah, it's a great question. The way we're looking at this PFS is a de-risking step along the way. Yes, we are seeing cost inflation, no question about that. But we want to have that in our minds as we plan our exploration programs. And we'll see what the economics come out of that PFS. The first phase of our work in the PEA was successful. And I think we're continuing to add mineralization and the opportunity to expand the mine life, expand the margins through engineering factors, scheduling, improving on the operational plan. But mines are made. And you do that by doing the homework, by doing the detailed work around engineering, by understanding the environment in which you're permitting and the environment in which you're working, and to bring that forward to a point where you've got enough data and enough clarity and certainty of information that you've de-risked the project to make an investment decision. The only way to do that is to continue to march forward with engineering aspects of these exploration development projects. Drilling is just part of the equation. We've got to do the homework to understand the technical factors, to de-risk and take these projects forward. And at the end of the day, we're in this to make investors money. There's no sense sitting on drill data with misunderstanding around the economics of that drill data. We're hunting for value, not ounces.
True. But again, in people's minds, and like I say, perception is reality, and all of this is people trying to understand lost opportunity cost versus the reality of the cost today and future costs. So, have you ever seen a situation where costs come down? I guess fuel can get cheaper. Will salaries get cheaper? Will the cost of drilling per meter get cheaper? Will that ever be reflected back into this? So that's the question you have and the debate you guys have at board level. And I guess retail investors want to try and understand, well, what does that argument on both sides look like?
Yeah. So yes, costs are going up, and we're seeing that in our drilling costs. We're seeing that in the estimates for our mining costs, even on this resource, which will come out next month. But we're also seeing an increase in the gold price. And so the careful balancing act that miners do is to make sure that revenues will exceed expenses, and to make sure that we're finding more gold to add more value to these projects. I emphasize, we have 3 million ounces of gold in the ground. The price of gold has doubled since we started this business in 2017. And I think that that's bringing more revenue opportunity to the equation. Yes, we have higher costs to contend with, but it's also an environment where we're getting more revenue. And that's a great business to be in. I think the margins will continue to be challenged as we go forward, but they are expanding as far as we're seeing with the drill bit, with the engineering study work, and with the excellent job that our engineers are doing to optimize what we have.
Okay, so right, you said the heap leach model is a way of getting to revenue, right? Getting to production, getting a re-rate for getting into production potentially too, and an increasing gold price should either cancel out rising costs or indeed exceed your expectations. So that's all good. And give us the complete sort of time frame on something like that, so we can I want to be able to park that up and focus on the exploration, because I think we're excited about the exploration potential on your assets, because they they're exceptional, right? So heap leach, if we look at a time frame, what would be an ideal time frame where we say, well, we think we can get some revenue going here on this thing? What would that look like?
Yeah, so we'll have the PFS done end of this year. We'll have our baseline data collected as supplemental to what we've got in 30 years of history on this site. And by early 2023, we'll be able to give some very specific guidance on our plans with respect to bringing this back into production. My guesstimate at this point in time is we're looking at the 2024-2025 timeframe for a construction start. We're dealing with a brownfield site, so it's not like we have to do a lot of earth moving or bring power lines in. So it'll move relatively quickly, but we're looking at 2024, 2025 kind of time frame.
Right. Okay. For the construction decision, and then what was that look like? 18 months, 24 months build, or is it heap leach a little bit quicker?
I think with the site that we have and the amount of work that we're looking at doing, it's going to be less than 18 months.
Okay. I just want to have people listening to this have that in their mind and get a sense of what you're going to be doing, obviously on that front, but also the time frame to revenue. And you're talking about 100 million or thereabouts. I guess that'll change plus or minus over the next 2 to 3 years or 2.5 years. So that's fine. What you say, right? So do you mind if we kind of jump back over to the exploration side of things? Because I say some of the numbers that has been coming out of the jobbers are pretty good. You got to be pleased with this. Why didn't you raise more money recently?
Great question. We've got a ton of drill targets, and it's very exciting to be drilling at Beartrack-Arnett. The reason we didn't raise more money is that we're stewards of the capital. We've got 86 million shares outstanding. And you'll notice, Matt, in our track record, we've been very careful about issuing shares and spending money where we could deliver value. And we see lots of opportunity to continue to drill, but we want to get that share price up before we start raising the next rounds of capital to do the further work on this project. We've got such a beautiful opportunity in the Jost area. We're getting in for the first time this year into outlying oxide targets from our Hades satellite deposit. We've got the Romans Trench target, which we haven't drilled yet. There's some historic holes in there, though, with over 20 meters of almost 2 grams per ton gold in oxides, close to surface, right on the haul road from Haiti. So we want to get in and test those places. We've got an undercover target in the Midlands that we want to go test. So we've got some very big catalysts in front of us in terms of exploration. And then, and not to dismiss this because we talked about the development plans, the engineering work that's underway, but there's a lot of de-risking that's going on with our metallurgical test work, our geotechnical work, and all of those things are important to surfacing value. Currently, we're trading at $12, $13 an ounce in the ground. And as this project moves forward, I think we'll get closer to that 2 to 3 times return potential that we see in some of our peers that are on the same path or a little bit further ahead and trading at multiples to where we are today. So answer your question, we want to bring more value into our stock before we issue more shares. And certainly we have the drill targets, but it's a matter of getting the right timing, the right news into our story, and we'll go from there.
Right, and who picked that up? It was a private placement. So who did you bring into the register?
So primarily Donald Smith and Co. And Donald Smith is one of the largest investors in the gold space. They told me that they haven't made a junior investment in 2 or 3 years. So this is a very good indication of a very smart investor taking a hold of Revival Gold and joining us in the march to value creation. Why are they in this stock? They are a deep value investor that has a love for domestic gold stories, and we offer that in spades. We also have the technical team, and we have people who've done this before. So from a Donald Smith point of view, low risk jurisdiction, great quality team, and the financing to unlock value through the drill bit and through engineering.
Well, see, that's a really interesting point to me, and perhaps one that people need to understand a little bit more. You're a 60 million market cap company. That's twice I've said it now. It's a small company. Guys like them don't come down this area, but they may not have invested in junior for the last 3 years. But there's not too many institutions who would dip their toes below 100 million, 150, probably 200 million. So I get they're fundamental investors and so forth, but could you give me the pitch that you gave them for them to get them over the line? Because that's a big deal in terms of investment committees and the process that they would have to go through to say, do you know what? This small company is something where I think it's worth putting a big chunk of our change into. Because I'm intrigued by that. It's either a personal relationship that you've got with someone there, or it's they've looked at this and listened to what you said. And I'm interested in what was the thing that got them over the line? Yeah,
it was 4 years of hard work and a team that's delivered on everything we've said we would deliver on. When we came to this story 4.5 years ago, there was no resource, there was no plan. And over the course of the last 4.5 years, we've built up a 3 million ounce resource, a PEA economics on the first phase. We've done that on a very modest budget. And we've been careful with the share count. I can't emphasize that enough. We've been very careful with the share count. And I think as a deep value investor, Donald Smith does their homework, looks for the quality of team, the asset that can advance, that has the milestones, that has the catalysts, and the team that can deliver. And they do their homework on all those things. And it doesn't happen overnight. It's not a relationship that just turns into a check. It's delivery, and it's taken 4 years to get to that point. But we're happy to have Donald Smith on board, along with our other institutional owners, all of which are quality gold funds, and all of which are optimistic about Revival Gold's, even if the gold price doesn't move from here. They are optimistic about what we've developed and what we are delivering in terms of value at the Beartrack-Arnett site.
Okay, money in. You've immediately brought someone in onto the board, Tim Warman. Track record solid, been at all the right places, been around the block. Is this just a nameplate guy, or is he actually going to be helping you? Because you're an engineer, you got a lot of engineers on the team. He brings something slightly different, doesn't he?
He does, yes. We've got lawyers, we've got finance people, we've got engineers, we've got operators, we've got company builders, we've got geologists. And what Tim brings to the table is the recent experience of taking the Pan project successfully from a concept to a producing asset through to the acquisition by Calibre. And, that's no small feat, right? There's a lot of challenges to get from A to B. And we're, at a similar stage as when Tim came along on the Pan project. We think that expertise that he brings to the table will be a value add for our investors. And guess what? Tim's an excited guy about our project and the geological potential. And he's got a great eye for that. He's been part of discovering a lot of ounces with Aurelian, with others, and he can see the potential in the geology as well. So we're looking for Tim to help us on all of those fronts: the execution, the discovery, the leadership, the vision. We just a super add to our team and a complementing aspect to a board that's got a lot of experience already.
Okay, look, Tim, I want to keep it short and sweet today, because it's really about just reminding ourselves of the business model that you guys are employing, how you've constructed that. I think you're going to come back when the resource is out in April, and let's kind of dive deep into the exploration component to there and have a slightly more technical interview. We will summarize it for, I think for the Crux Investor members, and try in terms of interpreting what it is that we talk about that day. So hopefully it'll make it a bit easier for everyone. But great year lined up for you guys, financed. I look forward to keeping close tabs on you.
Thank you, Matt.